Introducing the Institutional Pivot Matrix, a quantitative market timing framework designed to identify institutional accumulation and distribution zones, projected expansion targets, and high-probability reversal windows in real time. This system was built to help traders align price, structure, and time within a unified execution model. Most traders miss major market reversals, not because they lack effort, but because they lack institutional structure. Without quantified buy and sell zones, traders are left reacting emotionally to price movement. False breakouts, emotional entries, and a lack of time cycle awareness often result in late entries and premature exits. The Institutional Pivot Matrix was designed to eliminate that uncertainty by defining structure before the move occurs. The Institutional Pivot Matrix identifies where institutions accumulate positions and where they distribute inventory back into the market. These zones are derived from structural price ranges and expanded using quantitative projection models. Primary zones represent high-probability reaction areas, while secondary zones define deeper institutional positioning levels. Within the framework, accumulation and distribution zones are clearly defined. Green zones represent institutional accumulation, where buyers are expected to defend structure. Red zones represent institutional distribution, where supply enters the market. Directional arrows are generated within these zones, providing objective buy and sell signals based on structural positioning. Once price exits institutional zones, the pivot matrix structured expansion targets. These targets are derived from measured move analysis and expansion modeling. Primary targets define expected institutional reaction points, while secondary targets project extended directional movement. Markets move not only in price but in time. The Institutional Pivot Matrix time cycle reversal windows, identifying when price is most likely to change direction. When price enters a structural zone and aligns with a projected time window, reversal probability increases significantly. The highest probability trading opportunities occur when structure, targets, and time cycles align simultaneously. This convergence is known as institutional confluence. When confluence is present, directional conviction increases and execution risk decreases. The execution process follows a structured sequence. First, identify institutional structure. Second, wait for time alignment. Third, execute using directional triggers generated within the zones. This transforms trading from emotional decision-making into rule-based execution. Now that you've seen the Institutional Pivot Matrix framework, let's transition from theory into real-time market application. In the next segment, you'll see how institutional accumulation and distribution zones, projected targets, and time cycle windows appear on live charts. From there, I'll hand it over to Gary Dean, creator of the Institutional Pivot Matrix, to walk you through how he personally executes trades using the software.
Look at the Institutional Pivot Matrix framework. Inside live charts, the first thing that traders need to do is determine their anchor, typically a swing low to a swing high, and that is going to give us our accumulation zones. Accumulation zones represent institutional demand areas where buyers historically begin positioning within a structured range. If price engages into our accumulation zone and it holds, our upside expansion targets come into play. Targets 1, 2, and 3. Now on the distribution side, our anchor points would be our swing high to our swing low, and the software automatically generates our distribution zones, the primary as well as the secondary. If this holds down and price goes down, it activates our downside pivots 1, 2, and 3. This here is our timepiece of it, and that's a very important part of the model because you want to know when the important times are where we may see some kind of price activity or reversal. So these are the different time frames based off of our anchors right here, and they're spread out like that. And typically we look for some type of reversal or an extension of the rally that's going on. So you always want to keep an eye on these time periods. This framework defines directional pathways before price reaches them. So if price breaches here, our upside targets that are activated are 1, 2, and 3. If price breaches down here, Our downside targets are activated, and we have price 1, 2, and 3 within our institutional zones. The model identifies buy and sell pivots. These represent inflection points where directional momentum begins to shift inside structural positioning. The green pivot markers represent accumulation, and the red pivot markers represent distribution. These pivot levels provide execution. Rather than entering randomly inside zones, traders can align entries within the directional inflection points. So what we're looking at is a structured institutional framework. Structure defines institutional positioning. Zone expansion. Targets define directional pathway. Projected time windows identify cyclical probability, and the execution pivots refine entry within that framework. The model is objective and rule-based. It removes subjectivity from directional planning and replaces it with structured probability. Let's now transition to Gary Dean, creator of the institutional pivot matrix, as he walks through how he applies the framework in live market conditions.
Hey folks, Gary Dean here. In this short video, I'm going to go over how I use the institutional pivot matrix to make trades on a daily basis. So the first thing I want to do is I want to set up a trading framework. And the way I do that is I want to see where IWM is on different time frames. So now looking at the 60-minute chart here, and we're using our anchor low to our anchor high, and you can see this is our accumulation zone, and each time IWM has come into this accumulation zone, our primary, it's been bid back up. So we know we just got a new buy, an accumulation buy signal here, so we know the 60-minute is on the buy side. But when we take a look at the 15-minute chart, you can see that from this anchor low to this high, we're now in our distribution zone, and it tried to get through it, and if it did, then we'd be looking at IWM making it to the secondary up to the 265.43. But if it got through that level, what the really nice part about the software is that it would mean that our accumulation zone held, and now it gives you your upside targets, which a lot of people trade without targets, and that's very hard to do because you need to know where your destinations are. So if we get through the secondary here, we then know these are going to be our upside targets on IWM. So now let's take a look at the 5-minute chart, and again, what I like to look at is what's the duration. So when we're up here and there's a lot of duration to the downside, you can see we got this sell, our distribution signal here. IWM obviously gapped down and kept going. And when we are here, you can see that we had a lot of duration to the upside. Even though we went sideways and we had this little drip, we now saw IWM kicking into gear and went down from went from 257.76 all the way up to 264.25. But this is on a buy signal. Well, I mean, as far as the accumulation, it's an accumulation zone here, but we just got a sell trigger. Now this is a distribution trigger. And if we look at the 1-minute chart, this is actually almost at the exact top right here where we got this signal. And from there, we have IWM that just went from 264.31 all the way down to 262.79. So right now, that just now kicks us into where the 1-minute is now on a distribution as well. So we have the 5s that are on the accumulation. You have the 15s that are on a sell, and then you have the 1s that are on a distribution as well. So that's how you do it, and you can see that the target 1 hit, here's target 2 and 3, and this is very short term. And now what we want to take a look at is we have a lot of duration to the upside from here. So if the IWM is going to bounce, it'll probably make it all the way back up into our distribution zone. So that's the institutional pivot matrix in live market conditions. It shows you your institutional accumulation, your institutional distribution, structured entries, and structured targets. And that's how I make my trades every day. So I'm going to turn this back over to Mark, and you can see exactly what's included with your access to the software.
Institutional pivot matrix is a complete institutional execution framework, not a lagging indicator. It quantifies buy and sell zones, triggers directional entries, projects expansion targets, and maps forward time cycle reversal windows, all through multi-layer price and time confluence. You've now seen the institutional pivot matrix operating in live market conditions, identifying institutional buy and sell zones, triggering directional entries, and projecting expansion targets in real time. If you're ready to move beyond lagging indicators and start executing alongside institutional structure, you can now get access to the software. And as part of your access, you'll also receive our 2026 Institutional Astro Roadmap, mapping projected bullish, bearish, and neutral cycle phases, including the Great Reset that was predicted to end between February 17th and the 20th, as well as anticipated the extreme market topping window into August of 2026. Start trading with institutional precision today. Download the Institutional Pivot Matrix now. Activate your license and begin executing with structure.